Okay, welcome to my YouTube video. I'm going to explain to you what's going on in the stock market. All right, let's just quickly do an overview. We had a drop in the market back here, as you know, almost a year ago. All right, and that's when institutions were pulling their money out right here. We had another drop in the market in January with a hike in the interest rate. We just started to do another drop right here. She was ready to come all the way down to here again. But this is an election season. I see this all the time. When it's election season, they've got to hold the market up. Because why? Because like Obama, who's ever in office, they want to get their guy in. Okay? So they want to get Hillary in. The one thing they know is that the people look at the stock market to determine whether the economy is good or bad. People aren't sophisticated enough to know the stock market has nothing to do with the economy. What has to do with the measurement to identify how well the economy is productivity, okay? Economic growth, productivity. It's all about manufacturing productivity. But they don't look at the GDP. They just been taught and brainwashed by CNBC and Wall Street for years, hey, the stock market up, the economy's really doing good. So how did they push the stock market up when the economy is doing terrible? I mean, think about it. Our earnings have declined. The fourth quarter earnings of 2015 by 8.3%. Our GDP dropped 1.4%. Then the first quarter of 2016, our earnings dropped again 9%. Our GDP was a 0.5%. That's all we produced. We only, think about this, our increase in products that we produced was a 0.5%. Remember, at the same time when Reagan was in office, it was 4%. On an annualized basis right now, we're not even, it's about 1.5%. That's how bad it's doing. So they're able to move this market up going during the election because they got to get Hillary elected, and they got to keep the market up by doing something very simple. Two things they did. They, what they call engineer the market. They, one, took their printing machine, okay, and printed dollars, and with the dollars they go and they buy bonds. Okay, the 10-year treasury. When you buy bonds, the yield drops, interest rates drop. And when interest rates drop, the people who are in bonds, especially the big guys, the Saudis, the Chinese, they turn around and they move. They want to get out. So what they do is they just turn around and switch to stocks. So their money goes into stocks. So that was done by simply moving the bond price down by purchasing bonds from the printing machine. Of course, that causes inflation up here, which is a hidden tax on the poor and the middle class. Now, so the next thing they had to do, okay, they got that down. The next thing they had to do is get the dollar. I mean, to get the market to go up, and they did that by simply taking the job numbers. Every month, we have about an average of 212,000 jobs. And underneath that, discouraged workers, those are around 500,000 discouraged workers. Okay, so what does that mean? Well, that means discouraged workers are people who are not working, don't have a job, but they're not counted as unemployed. They say they're marginally attached to the labor force. So that's why they don't put them unemployed. It's all a bunch of bullshit. So what happened, I'm sorry for the word. So the 500,000, what that does, she decided to push it up to 660,000 this time. Well, what does that do? Well, when you push it up to 660,000, that means there's a lot more people that are not in the labor market. So the labor participation rate, how many people are participating in the labor market, dropped. Okay, it dropped. Okay, now the reason she did that is because she knew she was going to sacrifice. By doing that, she knew this number would drop to 38,000. So she knew this number would be changed to 38. Now that's dramatic. So what happens is when you have a bad number, the dollar drops. Okay. So you got the bond market dropping over here, and now you got the dollar. I'll put it up here. Now you got the dollar dropping. So the yields push the market up, and so doesn't the dollar. Because when the dollar goes down, all the multinational companies, okay, Pepsi, Coke, McDonald's, Caterpillar, all of them, okay? When they have the dollar, their business starts exploding because they can compete overseas. That's when the dollar is down. When the dollar is up, they don't. They can't. So she engineered the dollar to go down, and she did that by engineering. She pushed in more discouraged workers than normal. And because the labor participation rate dropped, then the amount of jobs dropped from 212 to 38. Here's what she knew. She knew everybody's going to forget about this number after a week, the public, the voters. One thing they're going to remember is they're going to remember the 4.7% unemployment rate. That's what she wants them to remember. Okay? So she can go and with her narrative, and Obama and I'm sorry, Hillary continue her fake narrative. Look, I am going to continue with the wonderful programs and policies of Obama. Look what he's accomplished. We had a 10% unemployment rate. We dropped it to 4.7 because we created 14 million jobs. That's why you can't afford to switch to someone else in midstream. You should stay with me because look at this. 4.7% is what our unemployment rate is. With an unemployment rate at 4.7%, remember what's going up with the bond prices going down. People go into the stock instead of bonds, and then when you have a bad job number, okay, a 38,000 job number. Remember what happens? Bad job number. Well, guess what? The dollar drops. Okay, and when the dollar drops, the stock market loves it. So the dollar drops. So you got the dollar dropping. You got the 10-year Treasury yield dropping. You got the yields dropping, the dollar dropping. That pushes up the stock market without having any earnings. So that's what this is. She created a fake rally. How long can she continue this? As long as she can keep that dollar down. Here's the problem, though. There's no earnings underneath this. This is called a bubble. There's no earnings under it. There's no revenues under it. There's no margins under it. It's just all fake. So if we get some bad news from China, which we will, okay, then we're going to continue. This will happen. So this is what we're still going to do this. It's just been delayed. It's just been delayed. So in the meantime, we still are buying stocks. We do it cautiously, but we make sure we buy the stocks that go up when the dollar is down and when the inflation and when the bond market's down, the bond yields are down and the dollar is down. We make sure we buy stocks that benefits and pushes up. So we stay very careful. It's a stock pickers market right now. It's no longer a stock market, but a market for stock pickers. You can make good money, of course, if you're a gang member. So join my gang, philsgang.com. So now I hope you understand how they financially engineered a fake stock market using a fake 38,000 job number. See you on the charts.